Let's get more on this because our business reporter, Joe Lynam, joins us. Joe, great to have you on the set with us. You look at the timing of this and you go, hang on, the European Central Bank is facing its biggest crisis in its history, basically. Losing its chief economist, how significant is that?
It's very significant. Make no mistake about it. This is a battle for the future role of the European Central Bank. What we have seen here, irrespective of what the official statement from the ECB says, this is not for personal reasons. This is professional opinion. We've seen Juergen Stark step aside because he simply cannot be on the executive board of the ECB while it buys Italian and Spanish bonds.
So he doesn't agree with the bond buying program?
As does all of the German central banking fraternity. As in the head of the former head of the central bank, Axel Weber, said he disagrees. The current head, Herr Weidemann, he's also disagreed. And now we have the most senior German guy on the executive panel of the ECB. Remember, the Germans are basically funding the ECB at the moment as the most powerful economy, dead against the idea of buying up Italian and Spanish bonds. Already $50 billion has been spent in the markets to keep the cost of borrowing for Italy and Spain at a relatively sustainable level. There was a time about 6 weeks ago when those interest rates, or yields as they're called, were reaching the levels at which Portugal, Ireland and Greece had to go to the IMF, etc., to get money. So they had to keep those two huge economies, Spain and Italy representing number 3 and 4 in the Eurozone, at a certain level of borrowing so that they didn't have to go cap in hand to the IMF.
Well, very significant, obviously, from what you're saying then. And we're going to talk about the G7 summit taking place as you and I are speaking in Marseille. But the ECB, you said it, is central to this Eurozone crisis, central to getting the Eurozone crisis out of its problems. But if the ECB can't agree on the programs, internally agree, then you go, well, what next? What's going to happen?
It was always going to be tough keeping 17 countries and their monetary policies on the same page as there currently is in the ECB. Add into the fact that most of those countries can't afford it, and only a few are sustaining it, as in Germany, and you're going to have problems. The essential role of the ECB always was, when it was established in the late 90s, was to keep monetary policy as an inflation in check. It's called BBC2, below but converging on 2%. It shouldn't be too far above that, and it shouldn't be below that. The Germans have stuck to the rules, but it's changed since then. It's broadened to preserving the euro itself. Jean-Claude Trichet, the head of the ECB, himself stepping down, by the way, in about 8 weeks. He's not keen on the idea of that inflation should be the number one thing. He wants to focus on growth and sustaining the euro itself. The Germans weren't that keen. Well.